And I'd love to welcome everybody back to the Independent Investor Channel Friday evening, 9 o'clock Eastern Standard Time. This is a consistent product that we put through on the Independent Investor Channel. It allows for open dialogue. The conversation tab is open and alive and well. The VIP link to the studio is also open if you'd like to kick in here, say hello, get a little airtime on the Independent Investor Channel. This channel belongs to you, not me. I'm just here to facilitate the business. But for you guys that are viewing the channel tonight, you're in for a special treat. Always continuing to foot stomp a message that I feel like escapes a lot of people. And that is, do you have what it takes to succeed in stock market investing? It's one of those questions that I think eludes a lot of people. I think a lot of people are naive to their own capability. I think a lot of people are self-absorbed in thinking that somehow they are entitled to financial security in their future. I think all too often we are our own worst enemy. We are the ones that derive these thoughts of capability and really privilege, I think, and it plagues a lot of people. It plagues a lot of people. It begs and it really prohibits complacency. And I think where complacency sets in, it takes away from your most appropriate time in really getting this stuff right. You'll evaluate a new car. You'll evaluate a college education for your children. You'll evaluate sunken cost in your own day-to-day consumption of sunken cost within your own daily budget. You will justify a $500,000 house that you cannot afford. You're living in that house, but the bank owns it. You will justify that up and down. But to justify the who, what, when, where, why, and how of investing really does summarize the most common questions. And if you answer 2 out of the 6, you answer 1 out of the 6, you're probably going to put together a fragmented makeup of what the schools of thought would have you understand about wealth building over time. What goes into it? Why are we doing it? What are the fundamentals that make up this idea of do you have what it takes? And I think anybody has the necessary pedigree. It is a mental mindset. I don't want to scare anybody off of this thing because I think a lot of people that I talk to have a genuine interest in building wealth for themselves. Okay. If you don't, this channel's not for you. Okay. I'm not going to teach you how to bake chocolate chip cookies tonight. I'm not going to teach you how to meet a significant other. I'm not going to teach you any of that stuff. You're kind of on your own. I will talk about some of those tangible benefits a little bit later on in the program when I start to identify and share some of those tangible and intangible attributes of my life that help contribute to this overall whole. Okay. But I'd like to give it a little time, allow everybody to get in here in the gallery. Please share your questions in the comment section here. I cannot believe that you guys are in here on the Independent Investor Channel. If you've got the game in the background, I will intend on kicking over there after the live stream. It's a pretty good series going on right now, but we got to get the business right first. Okay, we can engage in entertainment, we can have fun, we can do all that stuff. But guys, I'm serious about this topic. I'm serious about it for myself. And I'm serious about it for you. The fundamentals that I talk about can apply to your life all the way. If you feel like you've got this thing all taken care of, you got it buttoned up and you're fine, great, great. You're probably playing along a template that I'm going to disclose to you. But I would caution you of this. Never ever think that you've got it 100% perfected. Never think that you are an ace in this particular realm. There are would-be candidates that would have you believe that they are those said experts on TV that come on and would persuade you to buy into a narrative and to be wishy-washy on a stock market that just a few months ago would have you believing that we were predestined for a recession that was inevitable and was absolutely forthcoming. And we have yet to see that. Do I believe that a recession is coming? Yeah, I do. But I don't operate on the premise that a recession is coming and I need to somehow move or tinker with or recalibrate or reallocate or sell everything and go to bonds, as the thinking heads would have you suggest. Commentator after commentator a couple months ago was talking about switching into fixed income, talking about a 50-50 portfolio. And now those people are left holding the bag, meant and forced to double down on a narrative that has never, ever proven true in the stock market. And that is, nobody knows where the stock market is going at any given time. What we can do is look historically over time and try to understand what the best recipe for success over the long term is going to be. And there's really been no substitution whatsoever in putting your surplus capital to work over the long term and seeking a time horizon that is in line with what it is that you have in your life with your own capability and with your own time in the market. Super, super important to adhere to these tried and true fundamentals and principles that I'm going to outline when we come back after this short break. Guys, welcome to the Independent Investor Channel live stream, fast to 60 minutes on YouTube. Be back with you in just a moment. It's not really so much picking of the needle in the haystack in the stock market for you guys that are looking to build an introductory exposure to the stock market. If you are tuning into channels that would have you believe that picking the top three stocks, or because you tune into a YouTuber that seems really, really intense and karate chops your head as you watch their YouTube message and yells and screams intimately at you, and they have you convinced up and down that they have set answers to the top three stock picks in the market, run as fast as you can the other direction. Okay. Now, for some fun, Music Recommender asked me to pick my top three stocks for the next 10 years. I offered that in the group here. It's a fun deliberation to have. It's fun to gain awareness of different equities out there, but I would like new investors to try to gravitate toward fundamental strategies that would have you buying into, whether it be passive investing over the long term, seeking investments in ETFs, index funds, dividend growth strategy in high quality dividend aristocrats and dividend kings. If you don't know what I'm talking about, guys, you can do a little bit of research up on some of these things. But to buy into thematic investing, insofar as themes that are along the value side, I'm not talking about buying into an AI theme and putting all of your portfolio into an AI movement where Adobe Systems and NVIDIA and Google and companies of the like have been working on this for many, many months. And I think the market just as of late has reached and grasped this concept, and it's really infused a lot of momentum in the market, and it's allowed some of the largest tech companies to really run on us. Do I think that there is some room for some wider spread growth in the market? I do. But when we're answering the fundamental question of what to invest in, all right, you can get a pen and a paper. It doesn't do us any good to talk about individual names, as I've added there: Apple, Amazon, Google. I own monster positions in each of those three single stocks, but not to be misconstrued with the number one fundamental strategy of what to invest in when we talk about the importance of ETFs and index funds. And where you opt for the passive investive strategy through ETFs and index funds, You will find diversification where you will not find that on the single stock route. So when we're looking to answer the question number one, what to invest in, guys, the right answer is to invest in passive assets that seek broad market exposure. We talk about investing in the total market. We talk about investing in the S&P 500. It's illegal for me to give you ticker symbols. So where I can give you thematic investing, you can find the S&P 500 ETF or comparable index funds just as easy as anything now. And you don't need somebody sitting across from you to give you those specific ticker symbols. Most people who start investing, they get confused right off the bat. And then the people who are making those recommendations take advantage of good people who perceive financial markets as being some mystic place, some complex arena of people who have the knowledge, the few people who have the knowledge, and somehow us as lemmings, right? Regular retail investors that go to work every single day and seemingly don't have the necessary time to buy an ETF or an index fund product or a good basket of good quality dividend paying stocks, leave those inevitably in the right account. We'll talk about that in just a second. Would have you believe that the sleight of hand is very much in play, and that you have to humble yourself to the services of those people who are in the know. Okay. None of that exists. It's all made up in your mind. It's the public perception of success. Do you have what it takes to succeed? Well, in my mind, it's not humbling yourself to the whims of a financial planner. Mind you, it's the opposite of that. It's actually empowering yourself to make those decisions. Okay. Now, if you were lucky enough to have a portfolio the size of $500,000 or more, you would have the distinct honor of talking to Ken Fisher and his teams and subjecting your own money to his schedule of fees, where when you do better, he does better. Okay, he says it right out there. It's the most condescending message I've ever seen, and quite frankly, should be illegal. It's not. It's socially acceptable. And as a matter of fact, I would be the bad guy in this delivery of this message to understand that professionals need to make a living too. I agree. If I need my brain worked on, no problem. I will yield to the professional. If I need my heart worked on, I will yield to the professional. But with regard to something as material as money, it is a lot more about discipline and a whole hell of a lot less about the strength of your financial planner. And that, guys, is the God's honest truth. So when you're talking about and recap what to invest in, we're talking about quality stocks for fun, right? As music recommender pulled out of me for the 10-year recommendation for Amazon, Google, and Apple. Okay, those are single stock offerings, which should come in the right order of operations with regard to seeking your broad-based, diversified exposure for the few dollars when you start, and opt for a program on the onset, okay, as opposed to seeking that little bit more aggressive strategy in single stock, single equity exposure, and the like, speculative investing, et cetera, et cetera. It goes down the line there, but there is an order of entry of operations, all right? Number two, how to invest. How to invest. It is the title of thousands and thousands of YouTube videos out there. Seemingly everybody has a different answer. Everybody has the idea that if they can come on and they can drink the right color of drink, here it's whiskey sour tonight. I want to welcome everybody to the channel. That's one reason a lot of people like me is I don't beat around the bush. But how to invest. What is the trick here? When am I going to send you a link charging you $598 for my course? You can tune into a channel like mine and get the how to invest. And I will give you as close to the right answer as you could possibly find anywhere on Google, anywhere on YouTube, anywhere in the world, especially if you're seeking the answers to the questions that you are posing from somebody who is getting compensated for their time. All right. I make social media content. I do make a little money on the side. It's great. I wouldn't do this for free anymore because my time is too valuable, and quite frankly, so is yours. So the definition of our relationship here is that I deliver the goods, and you get the maximum benefit from the minutes that you spend with me. It's a fair deal. You will not have to pay me $598. You will not pay me a reduced fee of $59.98. As a matter of fact, I'm going to give you the goods for free. All right. If you pay attention to rule number one, it brings us to rule number two, how to invest. All right. We want a broad account base. Okay. A lot of people start with a savings and checking account. This is when you start it when you're what, 16, 12, 15 years old. And it's a pretty cool event when you go into the bank for the first time and you get issued a checkbook. You have no idea how to write a check, or, and you think that, this is a step up from the piggy bank that you got from grandma many, many moons ago that you've saved your whole life. You've put every quarter that you've ever saved, every can that you've ever turned into the store for a recycling charge. I used to walk around the neighborhood and collect cans. It was a good thing to do for the neighborhood. I would take it to the store and I would collect the money that I would get and I would put it in the piggy bank. This is a step up from that. All right. Well, when I talk about a broad account base, I'm talking about the ability to imagine yourself with a few additional accounts to start. All right. The retirement account is key. The type of retirement account is where to invest. But the idea of building your own personal empire, and you say, ah, dang, Ryan, hold on a second, man, this is crazy. This is going to cost me an arm and a leg and a fortune. See, I knew you were sleight of hand. I knew you were going to flip the script and pull back the curtain on me and start sending all these things to me that was going to cost me a lot of money. I have 4 M1 accounts. I've been charged zero to hold those accounts. I have about 20 total accounts. I do not pay bank fees. I get incentive to hold my credit account, and I get paid based on my status as an individual with over $500,000 in net worth in the bank in the portfolio. I get paid. Okay. So I'm not telling you guys things that are going to cost you money, rather diversify your opportunity through a conduit that will cost you nothing. Okay. Think I'm joking? Contact Fidelity. See how much it costs to start a brokerage account. See how much it costs to start a Roth IRA account, which is the flagship account that I talk to all the time. How many of you guys work for an employer that holds a 401k or sponsors a 401k program for you, but you have no idea what's in said 401k? If I'm speaking to you, then these are the staunch realities of things that you need to get around, turn on, and start to be in control of. All right. This is a big systemic problem amongst society, is that they feel somehow that they owe their financial planner, that somehow they owe their financial institution. Okay. They feel connected to them, like Bank of America gives two shits about me whatsoever. They don't. I use Bank of America. We are a symbiotic business relationship. Bank of America doesn't care how I feel. All right. They would charge me if I went default, just like they would the next 1,000 customers. If they could catch me with my pants down, they would start hitting me with late charges and all kinds of late payment penalties and all kinds of interest. The very fact of the matter is, I've worked very, very hard with my current credit discipline to earn the ability to earn my diversified base of accounts in the capacity that I do. So when we're talking about how to invest, we're setting a framework, we're setting a foundation of understanding that it's much, much more than those first couple preliminary accounts, which I do concede are super important. They are super important. Savings is my war chest, checking is my inflow outflow. Okay. And one thing when I talk about my intangible attributes of myself that helps me is my ability to be organized, very, very organized when it comes to my finances. I share this all the time when I talk about continually monitoring, not from the perspective of tinkering in and out of different accounts or selling off certain things that I'm up in. The Vanguard's passive sector specialty ETF portfolio that I share openly free of charge through the channel. It's going to be in the description of this, just like every other video that I've ever had. I don't even make affiliate money off of that. I don't care anymore. I don't care to make a few 50 bucks or 100 bucks off an account anymore. You can take it for free and have some solace in the fact that I don't get paid for that referral because it's so awesome. I make money. I'm approaching that $25,000 threshold. Started the account in 2019. You can do it too. Never touch the account. These are the wins that I talk about. All right. I'm focused on the right stuff. I'm not focused on that crap that's going to misconstrue the truth. Deploying a passive strategy like I've deployed in rule number one and using kind of a hybrid brokerage account in M1 Finance. Now I have four separate accounts with M1 Finance. Excuse me, I have three. The sector specialty ETF, the dividend portfolio, and the bond portfolio. I share those openly throughout the channel. But when I talk about a broad account base, look at the strategy that I am putting over each one of those accounts. I want you to broaden your horizons and broaden your perspective and look at yourself as your own financial powerhouse. You're more powerful than you give yourself credit for. It is mostly mental, if not altogether mental, and a whole hell of a lot less than the physical things that you'll do to help promote to that end. All right. So, the how to invest, this is where you'll define your tolerance. And you're like, okay, Ryan, again, I'm throwing in the towel. See, I told you this son of a gun, he's drinking whiskey sours. He's all jacked up tonight. He's going to tell me something that I can't do. I give up, throw in the towel. I'm going to watch the Heat play. Can't take a few minutes to focus on my financial business, then go watch the Heat and watch Denver beat Heat again. I'm going for Denver. Jokic is pretty special, man. So is Murray. But I digress. Define your tolerance. Okay. You cannot just jump blindly into financial markets without some idea about whether or not you're going to lose $3.50 on Monday during the market open and start cursing me up and down because you tuned into me and you're really connected with me because you like whiskey sours too. And I seem to speak the truth and I seem to be that guy on the other side of YouTube that talks a little bit different than others and can break down the information just like a common fella in the backyard flipping burgers and having a few beers. Yes, same guy, but you cannot jump headfirst into the market with no idea of what you can handle for tolerance. I will premise this by saying most people come to me and they're like, I'm a badass, I can handle anything. And then they lose $3.50 on Monday and they're like, you suck, Ryan. You're an asshole. You got me involved in financial markets. I can't take this. I'm out. And I kindly look at their portfolio or look at what they've lost, and it's indeed $3.50, which they would be perfectly okay with going through the checkout line at Walmart and buying 3 packs of Hubba Bubba and chewing it and spitting it on the sidewalk. But by God, they came to a YouTube opportunity and they lost $3.50 because had they not intervened with a YouTube opportunity, right, they wouldn't have lost that $3.50, and they'd be, by God, just better to enjoy that 5 seconds of Hubba Bubba instead of getting involved in financial markets. Okay, define your risk tolerance. You're either a moderate midline investor, okay, or a a very conservative investor, a moderate investor, or an aggressive investor. If you want to tell me you're an aggressive investor, you better be an aggressive investor, all right? Because when we're answering this how to invest, we're going to align certain strategies with a risky tolerance, or we're going to align the products to be a moderate investor and just enjoy the fruits of being an investor, or align on the low end, a more conservative. And there's no one that is more right than the other. Okay. Each and every person has the individual responsibility of identifying who they think they are in the market. You can start as a conservative investor, move yourself to a moderate investor, and maybe as you start to get used to the swings of the market, you don't freak out when you lose that $3.50, okay, and you don't miss that Hubba Bubba watermelon flavor, right, that you could have just as otherwise chewed, as opposed to losing it in the market. You don't lose your marbles and be pissed off at me. that I merely suggested that maybe it's better to invest rather than not invest in the stock market. All right. Define your risk tolerance. I've given you three parameters. If you want to put a value on it, 0 to 5, conservative, midline, 5, moderate, 5 to 10, as your aggressive investor. How to invest. If you're going to invest in the market, you have to dollar cost average markets. That means you pick an earmark, a surplus amount of capital to allocate to financial markets every 2 weeks, every week, every bi-monthly, every month, whatever it is that you can afford. I started with $25. I share that openly. I'm not embarrassed. I'm not proud. I don't have an ego problem. I do that to break it down to people who are effing scared. They're scared of investing. Investing is gambling. Well, somebody brought me onto the independent investor channel because he seems to deliver financial savvy in a way that would remove our stigma of investing, that investing is gambling, that this guy's been involved in financial markets since he was 16 years old. I'm now 45 and I'm still here. I'm still doing fine. I've built a nest egg up on a blue collar salary that if I had subjected myself to the whims of the influences that society would have put me on in a natural course of things, I wouldn't have had this level of net worth. That's why I come on and I share this so we can look to reciprocate the path for others who are seeking the same level of discipline in their life to gain some financial savvy. But to take and deploy that capital every single month, every single 2 weeks, all right, you're going to miss out on Hubba Bubba. I totally get it, right? Or the bubblegum tape or the big league chew or whatever it is that you like, or even worse, right? Maybe that smoking habit, you know what I mean? Do away with those things. All right. You got to earmark that surplus capital to buy into a DCA program. Dollar cost average. Dollar cost average. Say it with me. Dollar cost average. It is the very simple discipline of taking, okay, hey, I tell you what, I don't know, this Ryan guy, he seems all right, man. Take, he's talking about $25 a month. That's pretty freaking rich, man. I'm a real skeptic here. Time out here, Ryan. God dang it. I am in control of my money. I'm going to invest $5 a month. Fine. You go, girl. All right. Take the $5 and prove to yourself that it's not going to evaporate overnight. It's not going to evaporate in a week or a month. As a matter of fact, it might do a funny thing for you. It might actually work when you're actually going to work for your salary or your hourly wage. What a revolutionary concept that is. Put your money in a capacity to work for you while you're working for your money. That's not mine. There's been rogues of books written on this very, very concept. All right. I have breathed back 65,000 from the lows in the portfolio, not from anything special that I have done other than just I can come onto a YouTube audience and suggest to an audience that I am in fact an investor. If you doubt me, then that's your problem. Okay. I am in fact an investor. I was investing money at the lows when everybody thought that it was time to swap out your money for either fixed income or Hubba Bubba. All right. I was investing my money. All right. You want to drip markets. Dividend reinvestment program. As a self-directed investor, you can set those high quality dividend payers. That's why I share the M1 Finance portfolio. I share it openly through the channel. A lot of you guys are taking advantage of it. I just had a colleague of mine at work. He showed me his M1 Finance portfolio yesterday. He's like, Ryan, this is incredible. This is more money that I've made in 2 weeks since investing in M1 Finance than I would have made in that stinking variable annuity that asshole sold me, asshole financial planner who did not have my financial best needs or interest in mind. Sold me that product, made a ton of money on it for 1.9% per year annum rate of return. This is real. This is what happens on the ground roots. On the 20,000 foot level, people come to me and they're like, Ryan, you're hard on financial planners. They're good people. They have to earn a living too. When you look at the granular service delivery, I'm nary of impressed very rarely because so many people come to me and they're like, Ryan, I resonate with that too, man. They took 5.75 basis points away from my dividend reinvestment plan every single month. I hear what you're saying, man. It's highway freaking robbery. It is. It's highway robbery. Be a self-directed investor, man. You'll be so much better. Glad you did. The last thing in how to invest is to eliminate freaking debt. Eliminate the debt. All right. If your luxury is to go and chew hubba bubba all the time, going through aisle 7, fine. There's nothing that I can tell you as a grown ass adult to another adult to change some of those habits. But by God, if you can cut back on some of them, find that surplus capital, find the idea that perhaps maybe if you can't afford it, don't buy it. If you don't have the income coming in, stop buying crap. All right. Stop buying crap. Well, what do you know, Ryan? You've got a good job. I have been there and done that. Don't think for a second that you can play me or somehow convince me that you're more hard over than me. I lived on an effing boat. Okay. I get it. I used to be broke as a joke. I used to be in a hawk with the IRS. I got out of hawk with the IRS not once, but twice. Don't talk to me about debt. All right. I've got out of debt problems. I know people who have got out of debt problems. Right now, I have a debt to income ratio of 0. Get there. What can I say? How to invest. It is absolutely critical that you don't try to offset investing with horrible spending discipline on the other side of the pendulum. It's not going to work for you. All right. Got to get that right. Where to invest. This is the key critical component to everything that I talk about, and that is self-directed investing. If I haven't sold you on the idea that at least there's another option out there, you know what I mean? Yeah, okay, I hear you, Ryan, but I'm still going to stay with my financial planner. He dresses better than you. You come on to YouTube in the same t-shirt. You must be broke as a joke because you come on in your Nike shirt every week. I like my financial planner because he's got really awesome collection of ties. Fantastic. Fantastic. You go, girl. All right. You continue with that philosophy. We'll talk in 20 or 30 years to see who's got the better end of that spectrum in relationship to where your financial planner has got you with all of this talk and you failed to pay attention to the granular results rendered. All right. They want to set up a smoke screen. They want to establish this idea that you're a complete moron and they're a complete know-it-all. They want to talk big language like drip and like DCA in a manner that I could speak to, but I don't. I just tell you the goods. That's what it is. Watch CNBC. It's amazing some of these crackers that come on there and they talk incredibly phenomenal. I have no doubt they're intelligent people, but holy smokes, I use the analogy of analyzing the gray rock over the course of my entire life. And the more I stare at that rock, and the more I study that rock, and the more that the years and the decades compound over studying that rock, I am a freaking analyst of the rock. And at the end of the day, it is still just a gray rock. That's it. And that's sometimes how I feel about these financial analysts who come on and they study the market and they look at derivatives and they look at the inverted yield curve and they study the statistics and they look at the 1,000 moving average and they look at all of these incredible statistics, all the while missing what's right in front of their face. You cannot anticipate where the markets are going to go. History will give you an indication on where to guess, absolutely. And there is a lot of money in being those analysts that come on and they actually are proven right on their thesis. So you got a lot of analysts doubling down on the idiocracy that they've preached the last 6 months. So they've got to continue to double down and be like, yeah, I think a recession's coming. What about all the morons that took that advice and now they're all in fixed income? Hmm. How'd that work out for you? Good. Put that in your pipe and smoke it. Fantastic. Where to invest? Self-directed Roth IRA. It's the most important account that I would put out there. It's free of fees. It puts you in control of your own money. If you're interested in taking control of your money, this is your bailiwick. Okay. If you're interested in putting your head in the sand like an ostrich for the rest of your life, by all means, go be an ostrich. Go chew Hubba Bubba until the rapture. I could care less. All right. M1 Finance, where to invest. This is a passive platform that I recommend on the channel. I get no compensation anymore for that. It's totally fine. I've opted out of their affiliate program. I don't need it. I make tons of money elsewhere. It's a service back to the subscriber group. And if I was part of the subscriber group, I would appreciate that about me because I'm very, very real. And I share that. Those are real accounts with real money. approaching the $25,000 threshold in the passive opportunity. Where to invest? Savings, checking, and credit. Okay, very important to hold very good credit. Build the credit if you don't have good credit. Pay off the credit cards. I'm a big advocate of credit cards, but use it wisely. Okay, so when you're talking about where to invest, that'll help you. The next is who to invest in. This is easy. All right. I get it, Ryan. I got the answer. Hi, I'm back in the classroom. I got the answer, Ryan. Hubba Bubba. Buy stock in Hubba Bubba. Right? No, no. We are looking to invest in ourselves. That's what we're looking to do. All right. Define your investor profile. This is where you uh, define for yourself your investor profile and what type of investor you want to be. Okay. This is also where you identify who you are investing for. For me, it's a lot less than me and a lot more about the legacy and the family that I am investing for the future. All right. Now, do I look at that day to day and justify why I invest? Not necessarily. That's not important. Okay. If I completely foobar this thing up, right, I can turn it over to my family. They can have another generation of wealth building. And if I've given them the correct instruction and tutelage, they can carry that forward. Statistics would work against us, knowing that the next generation of wealth builders actually take that and squander the money away. All right. So you got to be careful with the instruction that you give to the next legacy. But who you're investing for, look after number one first. You're investing in yourself. You're looking at tuning into the independent investor channel. Who do you think that that's referring to? Yourself. The next is why invest. Why invest? This should be a rhetorical question that actually pisses you off. Okay. Are you investing for the institutions? Are you investing to save money for your bank so that your bank can go and invest that money for themselves and pay you an anemic interest rate? All right. The system is not meant to assist you. Okay. It is not designed to facilitate your wealth. It is not going to define or pave a yellow brick road for you so that you can just parachute into retirement someday. Wake up and smell the coffee. This should actually form a sense of urgency for you in understanding that the time to get involved with financial markets is like as of yesterday. Because if you are in present and you still have not taken action to take charge of your financial future, then you are behind the eight ball. Every single house in this country selling for $1 million right now. Paid attention? All right. Without my pay dirt sitting on the side, I would have nothing. I would be broke in this country. I would move to Mexico and I would live on pesos. I would be broke. If you're living in the lower class right now, it should piss you off. And I don't care. I do not discriminate. If you make 35,000 a year, if you make 135,000 a year. I know people who make six figures who are a complete freaking utter disaster. They're freaking all over the place. They're freaking complete morons and quite frankly terrible people. 35,000, you can make a name for yourself, but you have to adhere to the disciplines that I've outlined. I'm not going to give you sympathy if I'm telling you to reel back on the spending. It's just something that you have to do. You want to spend like a moron and then come on to the independent and think I'm going to give you all the magic to showcase in your retirement. It ain't going to be there for you. All right. It ain't going to be there. I don't know what to tell you. You're going to struggle in retirement and you will have regret. You will. Mark my word. All right. Why invest? Defining the investing time horizon is key in this and why you invest. I'm looking to have a secure financial future for my retirement. That's why I invest. That's the very answer for me. You can borrow it, take it, use it for what you will. That's fine. Market returns compounding over time. This is important. Why to invest? Because it's powerful. It's freaking powerful. Investing is powerful. Investing is not gambling. That's a misconception. The conversations that you have with Clarita across the street, the neighbor who tells you that they got involved 10 years ago with investing and they lost $3.50 and they just would have rather went and spent it on Hubba Bubba in aisle 7 is probably not the best investing advice and probably is misconstruing the fact that you should be involved just like everybody else on your effing street in building wealth for yourself. How else are you going to do it? You going to mow lawns for a living? Sell trinkets? Go on Etsy and sell stuff? I don't care. Do what you got to do. All right. But I'm telling you, Financial markets are very, very powerful if done correctly, and the compounding effect over your money over time is equally as powerful. And it is indeed, in its essence, a reason to invest your money. It is a reason to invest. Why do you invest? I'm looking to achieve compounding interest. Huh? Yeah, no, seriously. I'm looking to achieve compounding interest. Can you explain that? Sure as hell I can. I can explain it right on. Let me show you the calculator. It's awesome. God dang, this Ryan, he knows what he's talking about. Yeah, I know. Yeah, there's 31 people in here getting the goods tonight. When to invest. When to invest. Do we start at 45? Yeah, I mean, if you've never started before, but the earlier and often we can get to people, and the getting to people renders itself to an end that would see people investing earlier on in their life and more often in their life and increasing those contributions into the future, the better off society will be. The more personal wealth will exist. Okay. The more diversified people's wealth will be. The more accessible cash people will have. The more access to alternative investments people will have because they'll have the discretionary cash to engage in those types of activities: gold, silver, rare art, things of that nature, security, property, right? Real property. Okay. The idea of building up a stock portfolio is only one means to an end to a much more holistic idea of what wealth really is. Okay. So when we're talking about when to invest, it's just that simple: early and often. Now, going through this who, what, when, where, why, and how that I just went through for you guys, do you think you have a better idea of, do you have what it takes to make it in investing? There it is. There's the goods. Took me 41 seconds and 49 seconds tonight on a live stream. I was feeling saucy tonight. Now I'm going to give you what it is that I feel is my tangible and intangible benefits to investing. All right. I'm going to go through these quick and I'll get to some questions and comments, and then we will shut down what has been the fastest 60 minutes on YouTube tonight for sure. It's amazing how fast 60 minutes goes. Ask yourself, could you come onto YouTube and talk nonstop for 60 minutes? Pretty awesome. I would say that this is unscripted, but there's a few notes here that I've been running off of. This is my knock list tonight. All right. Secrets of success for me. If you don't have some of this stuff, you can work on it. If you do, you can be like, right on. All right, this is cool, man. And align yourself with a program that I think is scalable. I think anybody can deploy this. You don't need to have some sizable income, and you don't need to make 10,000 a month to make sure that you can segue $25 a month to make sure that you got the money for Hubba Bubba. Remember, that watermelon Hubba Bubba is awful tempting when you're talking about the instinctual buys when going through aisle 7. I'm serious. The temptation sometimes is just too overwhelming. All right. All right. I'm good. I don't chew Hubba Bubba, Ryan, you son of a gun, but I love Monster Energy. I love that Red Bull that's screaming at me. And I'm like, I'm really tired on aisle 7. And I just find myself just reaching for the Red Bull and pulling it out and drinking it on aisle 7, and I'm looking at everybody else and they're envious of me because I'm drinking the Red Bull on aisle 7 while I'm waiting to check out for my groceries. All the luxuries that we give up here in the United States. Something else. Tangible benefits. Solid freaking job. Get a freaking job. All right. I'm not going to come onto YouTube and tell you how to retire at 25. Not going to do that. Solid job. Something that provides you, I don't know, insurance. "Oh, I don't need that, Ryan. I'm never going to have a problem in my entire life. I'm good." No, you're not. You're not good. You're a human freaking being. You're made up of bone and flesh and water. Okay. You will have problems. You will need assistance. And it costs a truckload anymore to seek out that assistance. Find a job. Okay. Find a job that allows you to pay into a retirement opportunity, provides you some insurance, provides you stability and access to stable pay. Okay. For those people who can retire at 25, fantastic. I'll talk to you when you're 65 and see if you're just as impressed with your own capability, because you've burned through that $1 million that you made at 25, and you somehow are sitting on your hands at 65 wishing that you would have kept the pressure on when you could keep the pressure on when you're young and savvy and want to kick that ass. And I don't know, define a little meaning in your life. I don't know. Get a job. Number 2, tangible benefit, family. Most important thing out there. Family, support structure, gives every reason to do what it is that you do. Family. Three, no debt. Already talked about it. Get rid of the debt. It will be a cancer that you'll have to deal with. Might as well deal with it now. Cut it out now. Get it off the grid. I see people struggle with this their entire freaking life. Debt, get rid of it. Health, you got to have a good diet. You got to exercise. I'm in the gym now. I'm doing CrossFit, which is cool. I'm doing spin 3 times a week, and I'm doing CrossFit twice a week now. HIIT training, high intensity. All right. I'm being high intensity with you guys tonight because I'm trying to get this in under the wire. All right. Health, super important. Number five, I too grab a side hustle, make a little expenditure on the side, whatever it is that you do. I wasn't kidding about the Etsy stuff. I wasn't kidding. Make a little side hustle. You want to mow grass? Mow grass. Want to do electrical on the side? Want to do electrical as a primary career? I've got Eric's in the group right now. Do it. Kick that ass. All right. Make it happen. Make some side hustle. There's all kinds of opportunities to make money. This is just what landed on me and was bestowed upon me with the great honor of opportunity that has defined itself to be the I2 for me. Okay. Side hustle, very important. It is absolutely and will be a very uh, interesting contributor to my financial health and well being down the line. Number six, I am very organized. Okay. With the financial stuff, everything's electronic, everything has its own personality. I highly encourage you to get organized. I'm always having tax bills come up from other states. I move every 4 or 5 years. It is a heartache and a headache to keep up on insurances for the cars, registration for the cars, laws changing, et cetera, et cetera. You don't have set excuse. Most of you guys have roots underneath of your feet because you haven't left the same place that you have been domiciled. That's a luxury. Use that to your advantage. Okay. Seek out those things that are the most inexpensive in your life, insurances, keep up on the bills. Don't let them fade away. Keep up on them. Stay organized. Keep all that stuff for tax filing. That stuff is the logistics of your own life. You need to have that stuff dialed in. Be organized. This is just for me. This is what works for me. You want to be a complete disaster and live in a freaking pig pen and be a hoarder and sleep on top of your garbage pile. Go ahead and do that. I don't do that. It contributes to my health and well being. All right. Number seven, last thing, discretionary cash. I've identified that discretionary cash, and it's impressive how much I do save per month for the goals that I've just disclosed in the last 47 minutes of the live stream. Discretionary cash. Now I'll go over the intangible benefits. What makes me me? What makes not the water and bone and skin? I'm not trying to be gross, but kind of. Why not? The intangibles of what makes me me. I'm spiritually driven. Are you? Do you even want this? Do you even care to answer the question of do you have what it takes to make it in investing? Do you even care? If you don't care, shut it off. They've already shut it off anyway. This guy's yelling at me, freaking spilling whiskey sour all over me and talking about chewing hubba bubba. This guy's crazy. hmm I'm spiritual. I am driven. I have perspective about living the best life that I possibly can. I highly employ you do the same. Your life is worth just as much as anybody's out there. Okay. You have to find the value in your own life to pursue things that I'm talking about, getting ahead in life. All right. Getting to that spiritual actualization in your life and understanding that everything for the most part is pretty okay, right? And if you realize that everything is okay, then you can start to build on that. Hey, everything's okay, and start to maybe be a little bit forward thinking with your application. Appreciate what you have. Very important. I appreciate everything I have. I continue to build upon, and the new developments in my life, I appreciate every step of the way. I would appreciate it when I had nothing. I appreciate it now while I have something. I'll continue to appreciate as we continue to grow with our program. I'm opportunistic. All right. I'm always looking to fine tune the program, always looking to take on new opportunities as I grow in the business. Go back 5 years. I would have never thought for a second I'd be in front of a YouTube audience doing what it is that I love doing, talking about my favorite topic and making a little bit of side hustle to it. It was only made possible by my opportunistic approach. That's it. Opportunistic. Okay. Put a little risk on the table. Ryan, I'm telling you, be opportunistic, man. Put a little risk on your table. If I look back over my life, I'm sure as hell not going to say, I wish I would have done more. I wish I would have taken risk. I can say, honestly, I took some risk. Okay. Um, I'm content. I'm happy now. I was happy then. I'll be happy in the future. Get there. It's a great place. I'm disciplined. And finally, I am, in fact, a visionary. I am a visionary when it comes to this opportunity. I live most of the time in addressing and aspiring to the person that I am going to be 5 years from now. I highly encourage you to get to a place of such things. I will say the concepts are as follows: hard work and keep pressing toward goals. Okay. Don't ever get distracted. All right. Be a rock. Be absolutely focused on your goals going forward, and trust the investing philosophy of time in the market, not timing the market. And I can tell you what, from firsthand, every time I watch CNBC now, it always amazes me how a new philosophy emerges every single day about what are normal investors supposed to do with their money? Nothing. They're not supposed to do anything. Come into the Independent Investor channel for the 30 people who have got the real goods. They can realize that the mainstream media really isn't on their team. They're not. As a matter of fact, if you listen to all the crap that goes through most of their mouths, it's meant to drive an agenda and it's meant to create churn. Because if CNBC came on and reported out to the masses every single day that the very fundamental discipline that you should deploy day in and day out, week in, week out, month in and month out is to do absolutely freaking nothing, then they wouldn't have a show anymore, and they would lose sponsors and they would cease to make money because individuals would make money because people would realize that just sticking to markets over the long term for the life that they've been given is the true fundamental fact that works over time. Let's get down here and see who's in the group here. Fantastic, man. I just scrolled all the way down. Keep care of the nickel and dimes. The dollar keeps care of themselves. Fantastic. Kyle, great to see you, my friend. Very cool to see a man come into the live stream tonight. Sorry for the ninth inning shutout. I was on a rant tonight. I needed to get that off my chest. I hadn't done that for a while, so glad to do it. This is great stuff. Thanks, Ryan. Cheers. Fantastic. It is. I'm glad you got some benefit out of it. Share the message. For you guys that are with me, I know you get this stuff, but if there's somebody, a niece, nephew, somebody young, share it. Kick them my way. I delivered the goods in this one. Okay. This one's worth sharing. It's worth sharing. Okay. Right. Anna says it's awesome. Thanks, Ryan. It's no problem. I love this stuff. I really freaking do. I love the product. I love it. But the power of the share, I can't direct connect with everybody. Okay. So if you know people out there who can benefit from the message, man, do it. I mean, we've got collectively a phenomenal community that are coming together to try to push people toward an end, and where people will pick on me and this, oh, Ryan's this and Ryan's that. No, Ryan's freaking fine. You should really look in the mirror and focus on yourself. I'm totally freaking fine. All right. All the stuff that I talked about, that's all real. Define your list for you. Okay. I bid you all the best in doing so. Silent alerts in the house. Hi, brother. Heading to a poker game. Crush it, brother. Awesome. Well deserved too, man. And I know entering into the weekend, I know you work really, really hard. Well deserved. And we're going to keep our heads to the grindstone in this project that we're in. He just says dropping in to say hi. Really appreciate that, man. Good luck to you, man, and win a big hand. All right. All right. Good stuff. Good luck to you. And it's great seeing you, man. Very cool. All right. It says DCA is auto pay yourself first. We have 400 dividend renderings off that M1 Pump Finance portfolio. And it's like, I understand. Like, I'm not making recommendations. I'm not doing that. I'm just sharing my portfolio. Take it for what you will. But I wake up every single morning. I woke up this morning and I had a $6.98 dividend off of one equity. Okay, just this morning. I wake up most mornings and I have a dividend off of the portfolio. It's awesome. It's really cool stuff, man. It's a cool way to invest. But I have to buy a course. You gotta buy the course, man. It'll change your life. I don't know how to sell stuff like that. It's crazy. If I had to wake up every day and I had to like sell stuff like that, I had to sell stuff, man, I would hate myself. It would just suck. It would suck. But I do the Independent Investor channel free and clear of an agenda. I totally dig it, man. I totally dig it. And it's unique. I don't think anybody else can do this the way I do it. No way. No freaking way. No freaking way. He says cheers. Good stuff. Just good to see you, man. Proper 19. Dan Brad's in the house. What's going on, man? Good stuff. Threw you on here. Yeah, we had a pretty good live stream tonight, man. Very cool. We got about 5 minutes left. Looking to highlight some of the subscribers to the channel and some of the devote community members checking in from work. Hope everything. You need to take a break, brother. Come on, man. You gotta take a break. You work too hard. Okay, Matt's in the house. Matt's super awesome. He's in here like every weekend, like most of you guys. I really appreciate it. Very cool. Hopefully, we're keeping a high bar. I don't want to waste your effing time. I freaking don't. Okay. Um, we try to keep the content clean and pure and 60 minutes. That's why I don't do the 2 hour anymore. It was really out of respect for your time. I'd like to do it. There's a few people that would like me to do it, but really try to keep the content clean and streamlined and fun. And that way, when we wrap it up after some financial discipline, we can go about our evening and go about our weekend. The Everclear boys in the house. Everyone, hope everybody had a good week. Is fantastic. Awesome week. Justin again with Proper 19 says, "What's up?" Very cool stuff. Music recommender, cool. Those are all likely to be pretty safe bets, if wants to even be called that. So he's talking about my 3 stock picks, right? I own pretty big positions in each of these. I share that for the good of the group. Don't try to overthink investing. If you really have to scour a balance sheet and a cash flow statement and an income statement and determine whether or not it's a good or a bad investment, you're probably looking at something a little bit more intimately than you have to. All right, guys. So just be kind of careful about that. All right. Sometimes it's not quite as necessary as you might think. Hey, Ryan, what happened to Gen X and Kyle and all the other YouTubers you never mention anymore? Falling out. Oh, they're doing great things. Both of those guys. You know, uh, Gen X is doing great things. Did exactly. He's one of my featured channels, as is Kyle. Both of these guys featured channels. I took off JMac, and that wasn't because I was mad at JMac. It's just I want to add his card collecting channel because that's the one he's active on. And I just have a very simple rule to try to promote those channels that they're active on. That's a very simple rule that I have, is that if you're going to be one of my featured channels, I need to like you, number one, and think you provide value, but you have to be active on that channel. So I took JMac investing off because he's just not active on it. I think that'll change. I think he'll reinvigorate that channel maybe when he feels like it's worth it for the project. But I think he's having fun on the sports card stuff. I don't want to speak for him, but I watch that channel. I think it's pretty good. I don't watch JMac investing anymore because he's just not active on the channel. But both of those guys are featured channels. They'll always be cool with me. I could care less if I never hear a word from them. I don't do that stuff. I don't help them and provide those. If you go back through the history of the live streams, man, especially Gen X was on every Friday. Now Gen X has got a nice subscriber base, and rightfully so. I always said that. I think Gen X could probably trade some of the larger YouTubers on YouTube, and I think a little sweet justice would be paid there. And that I think the largest YouTubers on YouTube suck. I think they suck. I don't watch Jeremy just because he's a big channel. I think he sucks. I really do. That's just real talk. Okay. People who think like me and are real talk and sit across and see a snake oil salesman when they're sitting across from him, they'll agree with me. Half of the other lemmings that follow his channel be like, "You're just sour, you're jealous." Okay, I'm jealous. He's a complete moron. All right. Doesn't know squat about investing. He's a shitty investor. And he comes on and he influences a lot of morons to follow him like a bunch of lemmings. Okay. That's not my problem. That's his and his subscriber base. All right. But yeah, these two cats, I mean, they're featured channels of mine. It's a cool question. I appreciate you posing it to me. Kyle popped in. So like that was after you posed the question. You betcha. Pretty new to the channel. Started watching you when you did coverage of Enduro, liking the live stream. All good advice for beginners. It's a tutorial on the channel. Really, it's a new way of delivering information on what is possible through what I value, and that is in the trenches results. In other words, Derek, What is going to happen when you allocate capital to the markets in the capacity that I talked about? Self-directed and being an independent investor, right? Contributing to your own dollars, not seeking any type of middleman, rather eliminating the middleman and seeking your direct connection to the market is very, very powerful. So I'm really cool. I'm really glad. It's often very, very intriguing to me when new subscribers come to the channel and volunteer themselves as such. As a matter of fact, for you, I'm going to hop on here and give it the wrench of the night. Let's see here. Add as a moderator. You're going to be a managing moderator, standard moderator. Gotcha. Now you own a wrench, my friend. Very cool. And that's a pretty good segue into the weekend, my friend. Derek, welcome to the channel. I hope you get all the benefit that you're looking for. Take what it is that is useful for you, discard the rest, but always look out for number one first. Okay, always. All right, social media influencers can influence. I've been doing this a long, long time. I know how to get under people's skin. I know how to be, abrasive. I know how to make jokes like hubba bubba and crap like that. But at the end of the day, I'm very, very careful with and on the granular level with the influence that I push through on the channel. These are, for the most part, things that I absolutely do in my day-to-day life. Everything I shared with you, those are intimate details about what I practice every single day, and I share them with you openly through YouTube because they freaking work. And that's the granular, in the trenches, what actually produces results contrary to what the mainstream media would have you believe on what you should do with your program. Guys, I appreciate you tuning in to the live stream past 60 minutes on YouTube. I'll cut you loose. Have a great rest of the weekend. We'll be back with you next Friday on the Independent Investor Channel live stream. Be well. We'll catch you next week.